Hi, everybody. It is March 6th, the Market Update Desk with Scott Riley, NMLS number 157524. Well, we ended a turbulent week with a crazy day so far in the market. It seems like it's kind of par for the course. We'd been waiting all week for the jobs report. Boy, did that disappoint to the downside. What did we see? We saw non farm payrolls, the headline number came in at a minus 92,000 jobs. That means a loss of 92,000 jobs for January. I'm sorry, for February. That's compared to the estimate that we had been planning on of plus 50,000. In addition, we thought this was going to happen, but now we have confirmation. The two previous reports for December and January were revised downward by a combined 69,000. December was originally reported at 50,000, was revised to a negative number, negative 17,000. January was revised lower by 4,000 to 126,000. That actually is a surprise. Only a 4,000 job decrease. We're expecting another healthy downward revision to January when we get to next month's number. Unemployment edged higher to 4.4% from 4.3. But here's the thing, the non-rounded number was 4.444. We were 1/1000th away from showing 4.5 on the unemployment rate. That's a big deal to look at. The U6 all in unemployment actually fell to 7.9% from 8%. Where was most of these numbers coming from? Well, healthcare, which had been the primary driver in payrolls, saw a loss of 28,000 jobs. That's due to a temporary thing that we saw a strike in Kaiser that sidelined more than 30,000 workers in Hawaii and California. Healthcare, the primary growth. So that healthcare aspect probably going to flip and change next month. Federal jobs fell by 10,000. Transportation, warehousing also saw a reduction of 11,000. Now that's the headline on jobs report. The household survey actually saw minus 150,000 jobs. Labor force participation fell. Here's an interesting piece of data. The average unemployment duration grew to 25.7 weeks. That's been increasing as we've been going along. We did see weekly hours worked did tick up slightly. So it's another data point that we're watching. We did hear from the NEC Director Kevin Hassett this morning on CNBC. He was asked about the U.S. releasing oil from the Strategic Petroleum Reserve. Said that the U.S. has not given really much thought to that, as they believe the fears and concerns the market has been showing us in oil right now will be relieved soon. He thinks the success of the military and their plan to be able to help ships navigate through the Strait of Hormuz will reduce oil prices back down. Um, Whether that's a short term thing or a little farther out, we don't know. Oil has been the primary driver of the yields on the 10-year going up and mortgage rates going up. In fact, very wild ride today. At market open, we saw oil spike $10 a barrel. That was simultaneous of this very poor jobs report. Initially, we saw the 10-year treasury go down a couple ticks, but then reversed very, very quickly on the news that oil prices had gone above 90. Now, in the meantime, we've actually seen oil slip into the $87 a barrel category, so slid back, and we've seen yields on the 10-year treasury come back down to 4.12%. It's been really, really a wild ride. When we did see the yield rise on the 10-year, it spiked up to getting close to that 4.2 upward resistance level. So we were very concerned about that. So we're taking everything in here. We're trying to stay on top of it all. It's a wild ride. The primary driver of the reason we're not significantly better on mortgages, which would have happened with this jobs report, is the oil. Oil is the concern for inflation because it drives utility prices. So if we can get that a little more settled, we'll get a little better. But obviously, there's a lot to play out with what's going on in the Middle East. shipping through the Middle East, attacks, and all those different things. We'll keep on top of it. Great news is we had an offer accepted late last night. We were on the phone with the listing agent about 9:30, 9:45, helping go over the offer and confirming the strength of the borrower. Give us a call. We're working all weekend. 616-293-2189. Looks like we might hit 60 tomorrow. Hope you have a great afternoon, everybody. Bye-bye.